Hello and welcome back to the Girard Realty Show. It's Damian Girard, your host, and we have with us today our regular guest, and I guess sometimes are you a co-host, Mike?
I like to think so.
Mike Mudry from USA Mortgage,
to think so.
The co-host.
Thank you,
of
Mr.
the Girard
Damian.
Realty Show. And Ryan Zimmer is back with us today. Ryan, nice to see you.
Yeah, thanks for having me on.
It is my pleasure. I'm glad you're able to show up. We got kind of sick and tired of Alfonso having to back me up all the time.
Yeah, me too.
So it's good to have you come on and straighten things out a little bit, if you will. Last week, Mike, we talked about the do's and don'ts of what once you've had an accepted contract on a house, right? So,
Yep.
Ryan, you've had situations where you get a contract accepted, you negotiate it, it's a tough deal, and then, 2 or 3 weeks into the transaction, halfway to close, we discover that your guy's changed jobs or he has changed the way he gets compensated on his job, or he goes out to celebrate his new house by buying a new car, which is never a good idea. Yep. And so that went over really well. We got a lot of good feedback on that. So we're talking about, what else can we do to kind of just prepare people who may not be, our listeners may not be in the market today, but in the next couple months, school's getting out, summertime's coming, and we tend to be very busy in the summertime at the Girard Realty Group. So I wanted to talk about more of the detail stuff in the mortgage process. So preparing for the mortgage process and understanding the alphabet soup.
Like APR?
Like APR. I mean, everybody knows what interest rate is. GFE. So let's talk about APR. APR is the annual percentage rate.
That's correct.
And describe that because everybody talks about, and in our business, most of the verbiage and the marketing is all about interest rate.
Right.
But interest rate is only one
component.
Factor, and APR is related to, but what is it exactly?
The APR is an expression of what we call your note rate is the interest rate that you actually lock into. That's how your payment is calculated. So hypothetically, somebody locks into an interest rate of 3.5%.
Interest rate 3.5%.
Which we've had people do, recently in the last number of weeks. And then the APR is a function of certain closing costs expressed as a percentage of interest and added to that 3.5.
And why does anybody care? Well, your interest rate
ask
is
the federal government.
Well, no, we're not going to do that.
APRs are Truth in Lending Disclosure Statement, which is where the APR comes from, is made in compliance with federal law, and there are certain regulations that we have to follow. It's a Reg Z. Regulation Z is part of the law. And so they take certain things like if you were buying your interest rate down and paying points, that dollar amount would be expressed as a percentage of interest. They would take your closing fee maybe from the title company, your prepaid interest, that's the day you close to the end of the month. They might take a doc prep fee if you were paying one. Doesn't mean...
So you're saying they might take this, they might take that. Isn't it pretty pre-described what it is exactly that's going to go into it?
It's pre-described as far as what charges impact your APR, but not every lender charges all of those things that affect the APR.
And the whole point of it is really so that somebody could do a competitive bid, which we encourage people, right?
It's information, it's knowledge, being an informed consumer, knowing the difference and why it's important.
But also knowing that a buyer, Ryan, you got a customer who's going to buy a house, we tell them to, get a couple of quotes because they're paying for the use of someone else's money. That's what a mortgage is, right? Mm-hmm. And, of course, USA Mortgage frequently, if not almost always, comes out ahead because they are USA Mortgage. But if they get a bid from a bank or from another mortgage company or get a quote, it can be difficult to compare, right? And that's the purpose of the APR is to equalize.
And the good faith.
And the good faith, which we're going to get to, GFE. But just sticking with the APR is if it's a 3.5% interest rate from one guy and the other guy is the same interest rate, but he's got some fees loaded in there.
Correct.
Those fees, those lender fees,
title fees,
they're going to be added in there as a cost of getting the loan.
Correct.
And so when you really want to get apples and apples comparison, that's the purpose of the APR.
So generally speaking, from a consumer perspective, when your APR is as close to your note rate as possible, that's how you know you're getting a low cost loan as the consumer.
Exactly.
Because you'll hear on the radio advertisements, and if they quote a rate or a payment, they're supposed to quote an APR. And when you see that on TV, read it in the paper. If you see that APR is a quarter to 0.5% higher, It's loaded up.
Well, but it's really 1/4 to 0.5% size of type, right? Because that's one of those little tiny.
Oh yeah, it's in the fine print.
Right, you got to have
to get out your readers
glass.
or your magnifying glass for sure, especially at your age.
Hey, wow.
Well,
you kind of threw me back. I don't even know what to say. I'm a radio show host with nothing to say. That was mean. That was just plain mean.
I apologize.
So APR, annual percentage rate,
yes, sir,
is at least as important as your interest rate that you're going to pay on the loan.
Yeah, very much so.
And then the other thing I just want to throw out also, we're not seeing a lot of 15-year mortgages, but you're still doing some 15 years.
Yeah.
I mean, typically we're going to assume everyone's going to do a 30-year mortgage because that's just kind of the American way. But you're still doing some 15s.
Absolutely.
And that's another area where you can see some confusion because a 15-year interest rate is going to be different than a 30-year interest rate.
Right. It'll be significantly lower.
But you still want to see the APR.
No doubt. Absolutely. APR is a very important calculation.
It is. It's important.
Very important.
So where is that APR going to be found by the consumer? Brian's customer is getting a couple of quotes, and he doesn't know what we're even talking about. Where is he going to see what the APR is?
Well, interestingly enough, if you're just kind of shopping around from lender to lender and you're wanting to know what their charges are, or maybe get an idea of a good faith, kind of a thing, it's not on the good faith estimate. It is only on the Truth in Lending disclosure statement.
Right.
Which is, again, made in compliance with Reg Z. So that's usually at the time of application. But now, we have software that can calculate that kind of thing and get you an accurate APR. Assuming that all of the information that we have to do that with is correct, we can do that ahead of time.
So you're going to get that in the Truth in Lending, which is a form that you have to provide.
That's right.
After the application is made
at
for
the time of
the
application.
Loan.
Right. So once we've printed those docs, have the information. If we're meeting face to face or sending it out via email or online signature, whatever, it will be in there.
Right.
That's a requirement up front.
And so, a lot of the times we're talking about the buyer side and the seller side of a real estate transactions. And most of the time, whatever we're talking about needs to be considered by or viewed by or understood by the buyer and the seller. This is really more just on the buyer side.
That's correct.
I mean, sellers obviously have a vested interest in knowing that the mortgage is going to go through, that, that the borrower has a pre-approved mortgage. But a seller's not going to necessarily get involved in the APR on the deal. That's kind of a buyer thing.
That's right.
So we are almost out of time, as usual. We just got started. You allowed yourself to be mean to me a little bit today, which wasted some of our time. And so we wanted to talk about GFE.
Will you bring me back?
I want to bring you back. Do we even have time to talk about good faith estimate?
Yes, we do.
Okay, so what is the GFE? What is the good faith estimate, and who cares?
Well, the borrower cares, and I care as the lender, because this is the piece that is going to inform the buyer of everything that they could expect in the transaction.
Gotcha.
Yeah.
So it's the estimate of all of the fees, all of the charges, all the closing costs, all of the things that are going to go into. And I think the important thing to know is that it changed a year or two ago, because now you guys, the mortgage guys, you actually have to be correct. I mean, in the old days, you just threw numbers out and you didn't know what somebody was going to charge for an appraisal or something, but.
Well, it's something that I go over in great detail with the consumer, and of course they have to sign a copy of it and receive a copy of it. So the good faith is that document that we give to them that is made in good faith,
right,
of what we anticipate their charges to be, including what current interest rates are or what they could lock into for how long.
But it's also including closing costs.
Absolutely.
Right? So
it's including everything that they could anticipate. Except for maybe a couple of things that we're not completely sure of. For example, a lot of people have a building inspection that's just not part of the good faith.
Right.
And sometimes a survey is not part of the good faith if they don't tell us that they want to have a survey or whatever. So.
And you're going to have to make estimates. I mean,
that's right.
Homeowners insurance is a closing.
Correct.
It's actually a prepaid item. We're going to talk later about the difference between closing costs and prepaid items.
But you mentioned before the break that document changed, and I believe it was in like January of 2010 when that document changed.
Well, that's ancient history, so we don't even care.
And it required lenders at that time to, whatever they're going to charge as their what they call adjusted origination charges on the good faith estimate, those have to be exact and could not go up.
Those are their own
charges.
Right. So if you said that an appraisal was going to be $350,
not an appraisal, that's a third party.
Okay, so
but any other
loan fees,
just whatever the loan fees are, that and some of those may impact the
processing
APR.
Fees.
Whatever it is, those have to be disclosed to the penny and cannot go up. So, or if there was a change, the lender would have to eat it. Mm-hmm. And the other fees are all from third parties now, like your title fees, your appraisal, your credit report, and so on. And if you underquote those by more than 10%, if those change by more than 10%, the lender has to eat the difference.
Yeah, I recall, quite
it's
a few.
It's called a tolerance cure.
Good faith estimates in the past, years ago, where I think that most of the lenders, not USA Mortgage necessarily, but I think for the most part, you just kind of threw the numbers out because it didn't, especially when there were the third-party fees that you guys didn't control. And in my experience, they were always way high.
Well,
they were estimated to be way high because then when they came in lower, I think, the buyer, felt better about it.
The good news for the consumer is that this makes it easier for the consumer to look and see what are the lender charges,
right?
Because that's really what they need to know. All the other third-party things are going to be what they are because the lender doesn't control them. It's what the title company is going to charge them. It's what their homeowner's insurance is going to be. It's what the taxes are going to be,
exactly.
All of that sort of thing.
And obviously they need to know because there's, some financial stuff. So
it's an important document. And, we go over it with every borrower in great detail to make sure there's no ambiguity about it.
And you get that at the time of
application.
So that's great. We appreciate it.